Hi everyone, welcome to another video. In today's video I will analyze Alibaba stock together with you. If you like this kind of content and want me to analyze your favorite stock, put a comment down below in the comment section. Alibaba is currently my biggest holding in my portfolio. Last month Alibaba stock has been slipping downwards because China came out with a lot of new regulations. Investors fear that the new regulations could hurt Alibaba's growth. In this video, we will go extensively over the different sectors that Alibaba reaches, the current valuation, the growth ahead, and the possible risks. To start off, it's important to see what Alibaba stands for. Alibaba wants to make it easy to do business anywhere. They try to help small enterprises to leverage innovation and technology to grow and compete more effectively in domestic and global economies. In the last years, Alibaba has created a very large ecosystem that enables participants to create and share value through their platforms. Alibaba is very open with the goals they want to reach in the following years. They seek for sustainability in the long run by building a culture, business models, and systems to last. Alibaba is also looking to continue their expansion into globalization and reaching more global consumers. One word summarizes this plan: growth. And to do this, it is important to make your current users stay attached in the ecosystem. So sustainability is a very smart move by Alibaba. Alibaba's ecosystem has a gross merchandise value of $1.2 trillion over the last 12 months, which is bigger than the Chinese retail marketplaces over the same period. Kind of insane, right? This gives us a great insight of how big Alibaba really is in China and globally. The ecosystem has over 1 billion annual active users. There are currently around 900 million active users in China and 240 million international. Like I said before, when having this giant amount of customers, it will be very hard to maintain this amount or even grow it. So sustainability of the ecosystem will be very important. When investing, it's always nice to see your company is doing efforts for the environment and giving back to society, which might even be in their own advantage in the long run. Let's take a deeper dive into the ecosystem. Alibaba's ecosystem wants to make sure you can do everything with the apps and websites they are offering. The biggest piece of the pie is their retail and wholesale commerce. In the West, most of you probably heard of or had advertisements of AliExpress. Alibaba also offers logistics and payment services for businesses. Alipay is the online paying system that is owned for 33% by Alibaba. It has more than 1.3 billion unique users. Next to this, Alibaba owns the largest cloud computing company in China and Asia Pacific. There are still a lot of companies that I did not mention. We can now have a better view of how impactful and at what scale Alibaba is operating. In my opinion, this company has a very big moat. The company has an advantage over its competitors, which allows it to protect its market share. Last year, Alibaba's revenue growth was 70%. This company is growing very quickly. Don't forget, Alibaba is a very big company. To keep growing so fast, it must mean they are doing something right. Their new segment, cloud computing, is also growing at a phenomenal speed and is estimated to grow even more into the next years as it gets more important. If we look at the cash flow of Alibaba, we can see it's going up every year. Free cash flow is the cash a company generates after accounting cash needed for operations and to maintain their capital assets. The leftovers they can reinvest in the ecosystem or pay off their debts, since they do not pay out a dividend. The balance sheet looks very healthy. They got plenty of cash to pay off all their short-term bills. The debt is increasing, but I'm not concerned about this. Alibaba can almost pay off all their debt with 1 year of free cash flow. This is extremely good. Not many companies can do that. The current valuation is what makes Alibaba really attractive. They're trading at a current PE ratio of 20. In last videos I said we want to look for PE lower than 20. But given the fact that Alibaba is growing so fast, you might be willing to pay a higher PE for it. Alibaba has a pretty high profit margin if we compare it to the profit margin of Amazon. So after hearing all this, why did Alibaba tank 50% in the last months? One of the first worries investors had was the disappearing of Jack Ma, former CEO of Alibaba. Last year, he spoke about his own opinions of the financial system in China. The Communist Party were not a fan of that, and Jack Ma was laying low for a couple of months after that. The second problem was the fine that Alibaba got for supposedly abusing its market dominance. Alibaba accepted the penalty and will ensure its compliance. After this, more and more Chinese companies kept getting targeted by China regulatory crackdown, which made all Chinese companies keep going down in value. Since short, a comeback is happening in the Chinese stocks, most of the crackdown seems to be past now. Next to this, Jack Ma is currently traveling again in Europe, which is giving new fuel into the recovery. Alibaba has also revealed they are making their own server chips, based on 5nm technology. They plan to use the chips to support the current and future businesses across Alibaba ecosystem. This gave the stock another boost back up. The long-awaited IPO of Alipay can also be another big catalyst coming up sooner or later. In my opinion, the China sell-off was a bit overblown, which gave good opportunities in some of the leading Chinese companies. I don't believe China would hurt one of their leading businesses beyond repair. America also has its antitrust issues with American companies. China is for sure not the only country that is setting certain rules and keeping companies away from being a monopoly. How am I currently approaching Alibaba? I've been heavily buying the stock since it has dropped substantially. At the moment, my position in Alibaba is too big to keep buying any shares. It has even taken the biggest position in my portfolio. I will be diversifying more into other companies. If something happens in China, my portfolio will not be completely destroyed. But in my opinion, the stock is still undervalued. Opportunities like these don't show often. Warren Buffett would say, be greedy when others are fearful. This was everything for today. Thanks for watching. Subscribe and smash the like button if you enjoyed the video. If you have any questions, leave them down below in the comment section or send me an email. Below the video you can find a link to book Zero where you can get a free share when you top up your account. Take care and see you in the next video.